Good morning and welcome to BeeferLink TV, your daily dose of industry information. This episode is the next chapter of our series on insurance, and joining me this morning is Mike Yarwood from the TT Club to talk about why we should be insuring our goods in the first place. So first of all, Mike, thank you so much for joining us.
Good morning. Thank you very much for asking me along. Just by quick way of introduction, I'm Mike Yarwood, as you kindly just introduced. I sit as Managing Director of Loss Prevention at TT Club. TT Club, for those who are unaware on the video, are a specialist liability insurance company. We specialise in the global logistics supply chain, and again cover a vast range of risks through that global supply chain, from the containers and the shells themselves all the way through to ports, terminals, and of course many freight forwarders.
Sure. Thank you very much again for joining us, Mike. So my first question for you is, where Beefer members are moving goods internationally, there are a host of things that can go wrong, isn't there? So whether it's from theft or there's some damage that's happened to the piece of cargo, how can members ensure that the cargo they're transporting is protected in the first place?
Sure, and a great question, thank you. So risk management is a vital part of the equation, I think, in this context. And again, ensuring that that cargo is adequately protected, and that could be through packaging, ensuring that it's packed in the cargo transport unit correctly, that due diligence is undertaken on the contractors that are being used through the supply chain. And here, really, we're looking at sort of ensuring that they are legitimate, not fraudsters, and that communications are accurate and timely with counterparts. And these are all prudent measures. And the communications piece is one that's kind of often overlooked, but the fundamentals of ensuring that you have clear communication with your counterparties is really quite important. A good understanding of the cargo that you're moving is also another prudent aspect. Is it theft attractive? Is it temperature sensitive? What's the risk landscape like that I'm moving the goods through? Are there theft hotspots? Will the truck need to be parked overnight? And these are all themes to consider when risk assessing the transport of any goods.
Sure.
Of course, even with the most diligent planning and execution, unforeseen events can still occur during transit. And another risk transfer mechanism then available to the freight forwarder is, of course, insurance. And there are different insurance products available. And what I wanted to try and consider here today more generally are two particular insurance products, that of marine cargo insurance and of marine liability insurance. And the levels of compensation available under each will typically differ, and on occasionally dramatically so. So understanding this and being empowered then to discuss the associated risks with customers not only avoids potential commercial friction in the event of a loss, but also then serves to strengthen that customer relationship and demonstrating sort of greater levels of expertise in the service delivery.
Sure. So we've touched on how members can ensure their cargo, is protected. But then sometimes we do have losses, don't we? So obviously, having followed a loss, a member has transported goods on behalf of their client. Customers often expect that they should be able to receive a full recovery for those items, but that's not always the case, is it, Mike?
No, so again, we speak and interact with many freight forwarders, both members and in the wider industry, and I think that this is an area of common misconception. I myself spent the early part of my career in freight forwarding, and I have to admit, hold my hands up, that it wasn't an area that was particularly clear to me either at the time. But of course, the freight forwarder will have their own insurance in place, but this will often cover only their legal liability under the relevant contract. As mentioned, the levels of compensation available under those different types of policy will typically differ. A marine liability policy will often be calculated in terms of compensation against the freight forwarder's legal liability, and that will come either under the contract with their customer, maybe their standard trading conditions, so the BEFA strict trading conditions, national law, or international convention, depending on where the goods are moving. And typically, compensation will be calculated in relation to either the number of packages being transported or by the weight of the cargo. So furthermore, a forwarder's liability is typically negligence based. So liability could be rejected entirely if the loss or damage did not occur due to the negligence of the forwarder. And this essentially can lead to some unwelcome commercial surprises and disputes with customers in the event of a loss. as you suggest, the customer who might not even have perceived there to be a risk through transit will certainly be looking to their contractual partner, potentially the forwarder, and expecting full compensation.
Sure.
However, under the marine liability policy, if, for example, the cargo that you're carrying for the customer was very lightweight but very expensive, then there can be a significant gap between your legal liability as the forwarder and the value of the cargo. And maybe just one or two examples of this type of cargo might be sort of high value technologies, so smartphones, tablets, laptops. And another less obvious one is high fashion garments. Again, in recent months, we've seen cases where coats or jackets were being carried that retailed for over £1,000 each, but weighed very little. And again, the legal liability and therefore the compensation levels in such cases is likely to be far less than the value of the cargo. In contrast, a marine cargo insurance policy will arguably serve to provide the greatest level of protection and place the cargo owner back in the position that they enjoyed prior to the loss. Circumstances depending, of course, typically responding to the full declared value of the cargo. So you can start to see that in the event of a loss, while the circumstances might still be commercially damaging, it will be far less so on the basis that the customer could potentially recover their full loss under a marine cargo policy.
Sure. And given the potential consequences in terms of loss, isn't all cargo insured?
This is another great question, and another that when I was during my time in industry also made that assumption. But in short, no. I've seen many estimates of the percentage of cargo that moves around the world without a marine cargo insurance policy in place. And those range from sort of 10% at the lowest right the way up to sort of 50% at the highest. And of course, this is likely to be influenced by the route taken, the type of cargo, the value of the cargo. But either way, those figures represent a significant volume of cargo that is not covered by a marine cargo insurance policy. There are also many kind of less quantifiable aspects to such losses. How commercially damaging is it going to be to have to explain to your valued customer that not only has their cargo been lost, stolen, or damaged, but that you're also not legally liable to reimburse them in full for that loss? I think marine cargo insurance would also protect the customer against potential liabilities in the event of general average declaration. We've seen a number of these cases. They tend to be few and far between, but we have seen a number of these cases in recent years where general average has been declared, including for fire incidents on board ship, groundings, and collisions. And where marine cargo insurance is not in place, there are potentially significant exposures for the cargo owner to have their cargo transported to the intended destination, but also then released. And again, such incidents and demands are often very, very complex in nature and come as an unwelcome surprise to the cargo owner.
Sure. And my final question for you, Mike, is what more can our forwarders do to, like, when liaising with their clients, to drive this message forward about the importance of insuring their goods in transit?
Okay, so really, given the potential ramifications, I think the first stage really is ensuring that the items that we've been through in terms of knowledge. So develop a good knowledge of the risks involved and the ramifications of not having a marine cargo insurance in place. I think it'd be useful to highlight those risks to the customer and suggest that it would be prudent for them to purchase marine cargo insurance. Again, much will depend on the type of cargo, the value of the cargo, and the routing. But really, having that background knowledge and imparting that over to the customer would be a prudent step. Forwarders, of course, will often have a much deeper understanding of the supply chain risks than their customer, and therefore are arguably well positioned to consider to what extent their customers' goods are exposed during transit. I think when dealing with certainly international shipments, goods might pass through multiple jurisdictions, they'll pass through customs and various different handling processes. Marine cargo insurance will help ensure that your customers' goods are protected throughout that complex journey. Discussions with your customer about the importance of having cargo insurance in place, as mentioned, can enhance your credibility and your customer's satisfaction. And sometimes this will help lead to repeat and future business. And of course, avoiding those commercially damaging disputes in the event of a loss. I think it's possible in certain jurisdictions, and it's advisable for forwarders to seek legal guidance on this point, for forwarders to sell a marine cargo insurance policy to their customers. And this would be done through an arrangement with a cargo insurer in the background. This again can provide an upsell opportunity for the forwarder, whilst also adding value to their customer relationship and, of course, protect their goods and their financial position.
Sure, that's all very useful information. I'm sure our members will find it really valuable. Thank you so much, Mike, for joining us.
No worries. Thank you very much for inviting me along.
So if you'd like some further advice on this topic in particular, you can get in contact with Mike and his team, and we'll provide those contact details in this video's description. That's all for today's episode of B for Link TV, your daily dose of industry information.